believe that you're seeing my screen. Let me just verify that here. Listen, I've got a presentation here called the 3 Simple Steps to Generating a 7-Figure Income, and that's what we're going to go over today. But before we get started, I want to make sure that we do have our little disclaimer that information, charts, or examples contained in this presentation are for illustration and educational purposes only. They should not be considered advice or an endorsement to purchase or sell any of the security or financial instruments. We do not and cannot give any kind of financial advice. No employee or persons associating with us here at Trading Trainer registered or authorized to give financial advice. We do not trade on anyone's behalf. We do not recommend or receive any payments from any broker. And that's kind of a big thing with me, that I've always been broker agnostic. There are brokers that I personally use. I use them for my reasons only, meaning that they fit my portfolio, which is on the larger side, and they give me the customer service I demand. But some people like to choose brokers based on commissions, and a lot of the brokers have really nice commissions these days. They're looking for customers, so on and so forth. So we always try to do our programs that are broker agnostic. So you'll never see me advertising a broker or taking any sort of payments from brokers to try to get into your minds, if you will. With that said, I am AJ Brown. How many with the show of hands? Let me put your hands down here. I have a master button that allows me to put your hands down. How many with the show of hands have ever heard of me before? Please raise your hand. Oh, cool, cool. Good to see you. Good to see you. And just to check both sides of the equation here, how many with the show of hands have not heard of me before? Okay. Listen, they call me the world's most disciplined option trader, and they also call me the world's most laziest option trader, but I think that's kind of a misnomer. The reason why they say that is because I like to do what is minimally necessary in order to get a nice income paycheck. So you're not going to see me advocating becoming a day trader or anything to that effect, where you have to sit in front of the computer and you wind up getting more stressed than you would on a family vacation if you're part of my family, at least. So that's kind of where that nickname came from. I've been doing equities and option trading since 1997, and since 2002 we've been publishing daily insights for all of our Trading Trainer participants 5 days a week, every night. And I have to say that with all the folks out here pitching programs, I feel like kind of the grandfather, even though I started doing this in my 20s. I'm now 45 years old, but I seem to have weathered more than a lot of the folks talking to us these days. I also have a ebook that's been around that's called the 7 Successful Strategies of Successful Option Traders. And I believe that it's in the 7 figures of how many times it's been downloaded. So that's kind of cool. And my home study course, people like to point to that as the reason why they're successful. But the scoop is I don't like to portray myself as anybody else besides just a normal Joe off the block. In fact, I don't even have a finance degree. I have engineering degrees. I got a degree in mechanical engineering. I focus on things called automatic controls. I've got a business degree. And if anything, what I've been really focusing on for the last 10 years is how to do accelerated learning, which means be the teacher and get information conveyed to folks in a way that they'll retain it and that they'll get it quickly rather than the traditional ways. I'm not a very big advocate of the current education system, especially here in the United States, where people are trained after 18 years of schooling, and then at the end of that they're not able to be helpful people of society, right? That doesn't excite me. So I like to teach people what they need to know in as quick as time as possible and set them on their way. I also want to make sure you're clear and kind of emphasize that point about me. And I want to tell you that I was like everybody else in the 90s. I started to trade. We didn't have the web, So these webinar events are kind of cool, but what we had to do is we had to go learn from people. They were usually pitching programs in hotel rooms. How many with the show of hands can remember when you had to go for a weekend seminar on trading in a hotel room somewhere? So I was spending all my weekends when I was working at Hewlett Packard learning how to trade. And that first year I spent 27,000 on seminars. We're talking 1997 here. And then trying to follow what these guys were pitching. I lost 85,000. It's a good thing that I was a single guy working for a high-tech firm in Silicon Valley because I had the money to spend. But I spent more on learning how to do the trading by making stupid mistakes than I spent on my engineering degrees. And last thing about me is my big claim to fame is that I started a foundation, right? I take inner city gangbangers off the street and I teach them about financial awareness. I teach them how to invest. In fact, some of you might have you heard of my big experiment called the Investing Turtles experiment? If you have, raise your hand. This is where I took 14 inner city gangbangers and I taught them how to do option trading. And I even gave them a couple $1,000s each of my own money to see what would happen. Never expected any of it to come back. Cool thing is, after 6 months, each one of them paid me back my initial investment, and a whole bunch of them went off. One of them paid for himself to get through college, so on and so forth. It's really quite an exciting story. So if you ever get a chance, you can search on the internet for that story of my inner city kids. So that's where my real passion is teaching these kids. I founded Trading Trainer at the same time so that I could teach people the same thing, and I would also have a source of revenue in order to run the foundation. You need to pay for supplies, pay for bringing in teachers, and et cetera, et cetera. And so Trading Trainer was formed in 2003. But what's really neat, if you ever get a chance to work with us at Trading Trainer, is that when you're working with us, you realize that none of us are actually making money on any of the money you spend on our programs or our screeners or our advisory services or our coaching, because all of us do it in order to give the profit to this foundation. So I structured the company in a way where nobody, besides paying our expenses, nobody gets a profit. All the teachers are there. I wouldn't say that they're doing it in order to, and all the advisors and all the programs, they're not doing it because they do get something out of it. They get to work with really successful traders. They get the inner scoop, and they also get to kind of pick the minds of all of the program participants. And so they get plenty of benefit out of it besides the goodwill of helping the foundation. But none of them are getting paid. If you really think about, like, when somebody says, hey, we've got a program for a couple $1,000s, and you think about the number of people signing up for that person's program, you might realize that that person probably makes more money selling you those programs than he or she does investing. And that's a shame. Everybody that you work with at my company, they have to support themselves on their trading. So what they're telling you is very current, rather than something somebody learned 15 years ago and they're still trying to tell it to you. So that's kind of my claim to fame. So here we go. We talk a lot about these instant income calendar investments. And what I like about these particular types of investments is they're less subject to wild swings or devastating losses. In other words, what happened 8 weeks ago when the market sort of had a kickback with interest rates and realized that perhaps a lot of the fiscal stimulus wasn't going to come right away. Those wild swings did not didn't phase any of the participants in our either the people who use our screener, the people who get our advisory service, or the people who are just part of our program to kind of learn how to do it themselves. We're definitely immune to downturns. In fact, a lot of our investments that we make in the options market can be structured to profit from the downturns. We always build in something called profit buffers. These profit buffers can be structured upside down, which means they especially work when times go topsy-turvy. And our goal is to earn more than 6% per month on our investments. And our goal is also, you might want to write this down. In fact, let's pull out a notepad and take some important notes here right live. I always like to make our presentations somewhat live. Not somewhat, I am here live. Number one, our goal is for 6% per month on our investments, and our goal is to fully invest our portfolio. So whatever your portfolio for investment is, we're not trying to earn 6% per month on 30% of it, because that would only be 2% per month. We're trying to earn a full 6% or more. In fact, a lot of our program participants over the last year have been earning in the double digits per month on the whole portfolio. When we're talking about the type of investments I do, they last on average 5 months. Now I have some that only go 1 month, and I have others that have gone as long as 14 months. 14 months is one that I had that went for in 2009. I haven't been able to do that again. I have quite a few right now that have just hit 7 months of length. Like I said, I like to have as little effort by me. So when I find a good investment, I keep rolling the money every month, every month, every month, if that makes sense. The churn in my investments is about 2 different symbols per quarter. So those symbols could be stock symbols, they could be ETFs, they could be indexes. So I'm cycling in and out about on average, 2 different symbols per quarter. And my portfolio is fully invested in 3 to 7 trades. So I'm not doing a lot of work. In fact, the #1 comment I get from program participants after they're in it and they're involved in it is, it's boring. And then I say, well, why do you stick around there? Like I said, because it's freaking lucrative. So this is what we're talking about today, is this type of trading. So again, if you're looking for something where you're going to be replacing, you're looking for something to pass your time away, you don't have anything better to do, this is not it. This is something that requires hardly any time. So let's keep going here. So what's that big 6% number all about? And I always like to do this little kind of test with the audience, and you've probably seen it before if you've seen me speak. I'm gonna go get this going here. Give me 1 second. Let's see if I can get this slide up and running. I apologize here.
Hey AJ, are you there? It looks like we may have lost sound.
So the scoop is that compound interest is what we were just looking at. This is the most powerful force in the universe, and that's what we were just sawing. Now, of course, if we earn 6% on our money every month, how does that have to do with what we're talking about with doubling a penny? Well, if you take the simple interest on 6% per month and you add 6% and you add 6% and add 6%, the beautiful thing about that is at the end of the year, your investment doubles every year. So that's why we target ourselves on 6%. Now, like I said, a lot of our program participants have been doing double digits. In fact, I have quite a few people who started in April of last year, and by October, they had already doubled their portfolio. But we aim for the stars, hoping to hit the moon. So 6% is our goal, and that's what happens. We wind up doubling our investment every year. So if you start with 1,000, and with these particular types of investments, you could even go as low as $500. But $1,000 makes the math easy. That's $2,012 in 12 months. That's with the 6%, and that means $4,048 in 2 years. That means after 5 years, we're talking about $32,987. That's with a starting portfolio of $1,000. And then after 10 years, you're over $1 million. So this is what a lot of the folks I'm working with are pursuing with our screeners and with our just being part of the program, and also some people are doing it with our advisory service. So let me bring that slide back up here, and we'll keep on going. There it is. So what is all this stuff that I'm talking about? How do you get those kind of results? How can you take $100,000 if you have a $100,000 portfolio and create for yourself an income of $101,219.65 per year? So we're selling option premium. Let me go ahead and back that up a little bit because I realized that I had the screen frozen. So we're talking about 6% on your money every month, meaning that your investment will more than double every year. That means $1,000, 2012 in 12 months, $4,048 in 2 years, $32,987 in 5 years, $1 million, $1,088,187 in 10 years. And if you have a $100,000 portfolio and you start taking money out, $101,219.65 per year is what you can generate. You create a golden goose that lays golden eggs. So what we're actually investing in, it's called option premium, selling option premium. And it's quite lucrative and it's quite easy. There's different variables on an option, right? An option's price is equal to 2 different components. So this is where you really need to take notes. Please take some notes. We have something called the in-the-money value and the premium value. I'm actually going to bring out my pen here. So the option price, whatever you see as the option price when you look up on the big board for the CBOE or any of the exchanges carrying options, it's really equal to what the in-the-money value of that option is and its premium value. There's these two pieces, and it's important to know that. So please write that down in your notes. So some people don't even know what an option is. An option is a financial instrument called a derivative. The options we trade are called standardized contracts. That's not on my stack here. That's on my notepads, but you may want to write that down. It means that you don't have to custom negotiate these things. They get created by the exchanges, these standardized contracts, and then we actually write them or make them ourselves. We basically, it's kind of like LegalZoom. We take an off-the-shelf contract and we make it our own, and then we can buy and sell these things. They're typically bought by market movers, right, to protect themselves. They're insurance. They're sold to hedge risk against stocks, indexes, and exchanges, basically doing crazy thing, but that's not how I'm using them. You may want to write down these 4 simple transactions. These are fantastic ways to sell premium. Now, there's other ways to sell that premium component of an option, right? You can do iron condors, you can do vertical spreads. In a way, you can be doing horizontal spreads. But what we're doing here is writing covered calls, writing covered puts. Writing a covered put is flipping the covered call upside down. Or you could write a covered call against a leap, otherwise known as a diagonal call debit spread, or write a covered call against a covered put against a leap, a diagonal put debit spread. These 4 transactions focus on the component of an option that basically decays away with time. See, time is a really, really predictable thing. Last time I checked, 60 seconds did equal a minute. 60 minutes did equal an hour. 24 hours did equal a day. 7 days did equal a week. So on and so forth. 365 days in a year. Very, very predictable. The directional movement of an underlying symbol, a stock, an index, an ETF, Forex, commodities, baseball card prices. You can try all sorts of black magic of technical analysis to figure it out. You could do quantitative analysis like our friends on Wall Street do. But there's still an amount of shotgun approach to it because it's not predictable. 8 weeks ago when the price dropped down on the Fed news, it wasn't predictable. How many with the show of hands follow? Time passing by is predictable. And so we can actually optimize our option trades to actually become investments for us. We can sell the premium involved in the options, this component of the option price. And there's one thing, please write this down. One thing that's as stable, or not stable, but how about a given? Usually when we think about it, there's only 2 givens in life, right? One of the givens is death. Everybody who's alive is going to die at some point. And taxes. But there's one other given, and that is the premium component of an option price will always go to 0. On the expiration date of the option, it's always going to go to 0. No matter what it is worth today, at expiration, it will be 0. So if we sell premium for what it's worth today, it will be worth 0 at expiration. And so the time passes by and the premium will go to zero. That's a given. That's what happens to the premium. An options price by definition is the in-the-money value at expiration. There's no premium left. Now the premium goes high and low. Today's premium price can be high or low depending on whether people are freaked out or not. So for instance, people in the last 8 weeks have been somewhat freaked out. And so the price of premium has gone up. But the cool thing is it doesn't matter. On the third Friday of April, premium will be zero. Does that make sense? How many show of hands that makes sense? So we sell this premium and wait for it to tick down and go to zero. Let me give you an example of how that works. Own the stock. Just like our hypothetical real estate deal, we've got 3 potential outcomes. You buy a stock. Let's pick Amazon. At the time we recorded this video, it was trading at $1,416.78. The June 15th, $1,420 call option is trading for $121.75 per share. You'd buy the stock and sell the call option. You earn a $12,175 instant dividend and you own the stock. Just like our hypothetical real estate deal, we've got 3 potential outcomes. If Amazon closes above $1,420 on June 15th, your stock position gets called out of the market for $1,420 per share. You earn a $3.22 profit on the stock. You earn $121.75 per share from the option premium. That's $124.97 in profit on a $1,295.03 investment for a 9.6% profit. This is our ideal scenario. If Amazon is flat by June 15th, you keep your stock position with no loss or gain. You earn $121.75 per share from the option premium. You've got an 8.6% profit on your position in a few months. And you can sell a fresh call option as soon as your existing one expires. Finally, if Amazon drops by June 15th, you have a loss on your stock position, just like with any investment, but you've also got your $121.75 per share option premium. It acts like a profit buffer against your losses. As long as Amazon closes above $1,295, you'll at least break even. So you can buy a stock and earn a profit even if it drops. Not bad, right? But what happens if Amazon drops even further? What if your profit buffer isn't big enough? At that point, you still have your stock position. You can go right ahead and sell another call option. And you can keep doing that until Amazon rebounds.
With every option you sell, you bring your break-even price down a bit further. Of course, this trade is purely hypothetical. To give you a complete picture of how the instant income calendar works, let's walk through a real trade we took recently. On October 16th, we spotted an opportunity in Guess. At the time, it was trading at $15.90 per share. The $17 November 17 call was trading at 35 cents per share. We bought the stock and sold the call. We earned our instant dividend of $35 per contract. Just 22 trading days later, on November 17, Guess was trading at $17.66. We had our position called out of the market for a profit of $1.10 per share. On each 100 share option contract, we earned $145 on a $1,555 of investment. In our case, we invested in 4 contracts. We earned $580 on $6,220 of investment. That's a 9.3% return in 22 trading days. This wasn't some random anomaly either. We've seen dozens of trades exactly like that one, like a 17% return on Micron in 12 days when the stock traded up, a 15% return on Activision in 34 days when the stock treaded water, and a 14% return on Allscripts Healthcare in 86 days when the stock dumped.
So that kind of explained it from a covered call perspective, right? That showed what would happen if we bought Amazon. Then we actually showed you the real trade that we did on Guess Jeans last fall. But the scoop is that there's more to it. And I've got a couple of extra little clips here where I've gone through other pieces of my portfolio where you can see that we actually can restructure these trades. By the way, if monthly is not your thing, options just about across the board are now weekly. And so there are some folks who are doing it weekly. Let me take a moment before I show you the next example and explain to you the whole weekly piece, because with the weekly options, you're actually doing this exercise instead of every month, every week. And so you're going for about 1.5% return every week. Now, if you remember our equation that we did with the interest on 6% every month, by doing it weekly, you actually at the end of the year wind up a little bit better if you're focusing on the 1.5% returns per week, which is doable. And because they're now compounding 52 times instead of 12 times, it really works out to your benefit. And a lot of people say, well, AJ, why do you personally only use weekly when the timing is necessary, but otherwise stick to the monthlies? 2 reasons. The weeklies are not as popular, meaning the liquidity on the weeklies is down. That's not a problem if you're dealing with portfolios $500, $1,000, $20,000, even up to $100 or a couple of $100,000. But in order to make this scalable into the 7-figure portfolios, which is what I'm dealing with, you need to have a lot of liquidity. In fact, I'm not even investing in some of the symbols that would be ripe simply because of a lack of liquidity. But that's the beautiful part of this, is that I can scale this from a $500 portfolio all the way up to a $10 million portfolio or higher. I haven't been able to experiment with it higher because I'm not there yet, but I'm at about halfway there, and it's very much doable. You just have to focus on the liquidity is the one piece. The other piece is sticking with my name of being the lazy trader. I don't like to do that much work, and having to do that much work on a weekly basis, I got too much other things to do. I like to scuba dive. I like to pick up at a moment's notice and fly somewhere and see a theater performance, or I like to pick up for 6 months like I did in 2014 and go live in Sardinia, right? Which is a small island in the middle of the Mediterranean. Thankfully, they have internet, so I was able to teach my classes and do my trading. But these are the things I like to do with my time. So again, I always weigh the amount of return versus the amount of effort and time and energy. It's called efficiency, and I don't like to be spending too much extra time of my own without getting the efficiency. But I can teach you, and I can show you, and our screener works as well. But let me show you the next example here.
We love to find trades like this one we had recently. On January 2nd, Micron was trading at $43 per share. That was a little rich for my blood. I decided to use one of our variants. I used the variant where we sell premium against the stock's leap instead of the stock itself. It lowers the cost of entry to get into this kind of investment. It's just one of our alternatives in the instant income calendar toolbox. On January 2nd, the Micron 2019 $20 strike price leap was trading at $22.50 per share. The 46 January call was trading at $2 per share. We bought the leap and sold the call. We earned our instant dividend of $200 per contract, or $800 overall on our 4 contracts. Just 25 trading days later, on February 6, Micron was trading at $44. The Micron 2019 $20 strike price leap was trading at $24. We had our position expire worthless. And if we liquidated our position, we'd get our $24. And on each 100 share option contract, we would have earned $350 on a $2,050 investment. Because we traded 4 contracts, we earned $1,400 on a $8,200 investment. That's a 17.1% return in just 25 trading days. Now, as I mentioned in the last video, there is a way to juice up those profits. On this trade, we could have earned 630% on our risk, with a maximum risk of just 50 cents per share. Not infinite risk, but capped risk. You will be learning that strategy in this video. For now, just remember, we're targeting a 6% total account return per month. If we can hit that target, every $1,000 in your portfolio would become $2,012 in 12 months. It would be $4,048 in 2 years. After 5, it's $32,987. And after 10, you'd be looking at $1,088,187. With a $100,000 portfolio, you could potentially withdraw $101,219.65 in income per year.
So that was an interesting example on Micron that we went through, where we actually used a leap rather than Micron, the stock itself. That reduces the cost basis. A lot of times bringing it into the realm for us to be able to invest in it when we have smaller portfolios. But it also increases the return on the investment. Now, your money management might have a smaller position in your portfolio, but that's still, if you're jacking up the returns on these, we call them, the lingo around the office is covered calls against leaps. But in reality, if you want the academic term, which sometimes I like to be nerdy and use the academic term, it's called a diagonal call debit spread. What I also emphasize, and this is really, really important, is that all of our trading, we can somehow synthetically create cash trades. Why cash trades? The important thing is our investments. We could be doubling our money left and right, but if we're being charged tax on short-term capital gains, that's going to eat a big chunk into our money-making efforts here. So I like to do all of my trades in a Roth IRA. We actually have folks available at Trading Train that show you how to structure those Roth IRAs. Again, all part of the program, such that you could actually take withdrawals from them, right? That's a whole nother story. But the scoop is you want to earn this money tax-free. If you're in Canada, it's called the RRSP, and they have tax-free versions as well. So we want to only do cash trades. The reason is because I don't know a broker yet, and that will allow you to do margin trades. So let's do one last example, and then I'll give you some details on how to get a hold of me if you're interested. So let's do one more example here. Let me cue it up.
Within 5 minutes from now, you could join them. Within 24 hours, you could have your first instant income calendar trade. It might look something like this. On October 26th, Energy Transfer Equity was trading at $16.60 per share. The $18 November 17th call was trading at 50 cents per share. The $16 December 15th put was trading at 14 cents per share. We bought the stock, sold the call, and bought the put. We earned our instant dividend of $50 per contract, or $200 for our 4-contract position. We paid $14 per contract, or $56 for our insurance policy, capping our max loss at 24 cents per share. Just 15 trading days later, on November 17, Energy Transfer Equity was trading at $16.31. We had our call expire worthless for a profit of 36 cents per share. On each 100 share option contract, we earned $36 on $24 of risk. For our whole position of 4 contracts, we earned $144 on $96 of risk. That's a 150% return on risk in 15 trading days, 22 total days. We have done that over and over each month, always capping our risk. No infinite risk. The great part is we continue to lower our investment month in and month out, cycle after cycle. If we were to liquidate our trade now, we'd walk away with a total profit of $956 on a total investment of $6,380 for a return on investment of 15%. But we're not going to do that. Our current return on risk is infinite. Let me explain. After all our cycles, our current instant dividend is $1.22 per share. That reduces our cost basis to $15.38. However, our risk is capped at $16 with our put insurance. You see, we have a risk-free trade. Isn't that amazing? We can just continue to let this trade run on and on and on, and we'll just earn income every cycle, no matter what the market is doing. A return like that isn't abnormal. We've also had trades like a 43% return on the index in 75 days when the stock traded up, a 9% return on Guess Jeans in 31 days when the stock treaded water, and a 2% return on Bloomin' Brands in 59 days when the stock dumped. Our goal is to hit a 6% return per month. If you can hit that target, every $1,000 in your portfolio becomes $2,012 in 12 months. It would potentially be $4,048 in 2 years. After 5, it's $32,987. And after 10, you'd be looking at $1,088,187.
So we can even collar them is what we're saying here. And that's critical, especially now with a little bit more implied volatility, but also with the extra premium we're having, right? Because fear brings premium. Just like in 2001, when I made a killing on the fear that occurred, now, even though Main Street might not be benefiting as well from all the shenanigans that are happening, right? You still walk down the street and you still see that people aren't doing better off than they were before. But investors can always do well. They may not brag about it. In fact, they probably shouldn't brag about it, because it usually means that somebody else is not doing well. But the scoop is with the increased fear in the markets, people who are selling premium as investments like I am are doing pretty fantastic, and we're very happy and thankful for that fear. In fact, there should be a little bit of fear in investing, and when everybody and their brother is jumping in like on, you know, the worst comes to worst, some fake sort of currency or something like that as the next best investment, you know you're in trouble. At least that's my humble opinion. I like things that are tried and true. Hey, I wanted to show you, I only have about 7 minutes left. So this is what people who are part of our program actually get to participate in. This is the Learning Community web portal. This is our web portal, and basically we have a screener, and so we ask everybody to kind of go through the screener that gives you the trades and tells you exactly what you have to do if you want to restructure them as a covered put or a covered call on leaps or covered puts on leaps. We ask people to come to our workshop once a week and actually bring their investments, and we go ahead and dissect them and put them and make sure that we have some actual investments people can pursue for the upcoming week. But then the other piece is once you get into the program, if you want, you can actually have us do some advisory for you and tell you exactly based on your portfolio what you should be doing. So that's all the different options, but this is what the program looks like. We've got even a beta screener that we've been working on that people have been helping us with, which is really nice as well. With that said, again, because of my time here and because I wasted so much time talking to you guys, I'm going to pass by some of our results here to get to the 5 major points. Listen, buying options is typically a sucker's bet. So when you talk about people who are leveraging directional moves or leveraging earnings plays, it's very difficult to do, okay? But at the same time, you can generate a serious amount of income selling options, and you don't have to be married to your trading platform, right? And you can insure your position like we showed with the collar for up to 20 times return on risk. What we're doing is we're actually hunting for trades with a sniper rifle. We're not playing probabilities, which is called the shotgun method. And the thing that I want to play out for you is You can try to screen these opportunities by hand, but it's difficult. It's better to have some sort of tool. So if you want to take the time and look for the premium that needs to be found and program a screener, you can, or you can definitely join our program where we have a screener that runs every evening. Want to share with you in the last 5 minutes here, we had Charlene. Charlene came to us. We call this the 6% protocol tool, as you can imagine. She was a teacher for 29 years. She got sick. She actually got cancer, and she was ordered out of the classroom, and she had 13 years before her pension would vest. So she thought, she didn't actually care about the money at the moment because she thought she was dying. And she was actually came to peace with that. And then the worst thing happened, and it sucks when you beat cancer and that's considered the worst thing that happens, but that happened to her. She had a miraculous recovery, but then she had no livable retirement and she couldn't collect her pension for another 10 years. And so what is kind of bummer about that is that her life was saved and then there was nothing more. So she came to us, and she took whatever left was in her portfolio, and we just started doubling it. The 6% tool is very easy to use. All you do is read a daily table, find the stock you're interested, follow the strategy set out for you. I use this along with other strategies to diversify my financial plan. She has a penchant for mutual funds. I don't know why, but she does. I recently made 14% by just spending about 15 minutes reading about a company, following the chart, waiting for expiration. It was so easy. So here's the scoop. Got 3 minutes left. I set up this special link. It's got a discount involved. In fact, let's follow that link because you deserve it. If I follow that link right now, I'll just open up a browser window as we speak. Here it comes. So if we go to optioninvesting.org, /IIC, and now I'll go ahead and make this nice and big. You'll come to a page like this that explains the program even better, shows you even some more results. The program is 6 months of access to the screener and access to the workshops. There's no other fees, no other subscriptions. It's $497. We're only having the doors open for a little bit because we give so much hands-on that our time is just not able to cover everybody. So we want to be able to give a lot of personalized attention. And there is a guarantee. Let's see, where is the guarantee? Right here. Try my system for 6 months. If you follow my instructions, use the system, and still haven't earned a profit, I won't just refund the cost of access, but I will refund every dollar of the purchase and pay you $497 for your trouble. So I call that my double your money guarantee. We've been running this program since 2008. We open the doors periodically and then close them back down until people are up to speed on it, and it's open right now. So let me show you that URL one more time. If you ever want to get a hold of me, let me pull up my notepad here so I can just flash you my email address and phone number. I'm definitely open to answering your questions. Where is it? Here it is. Boop. We'll make sure that it's not covering the URL. If you have questions for me, please feel free. aj@tradingtrainer.com. And you can always call us at the office, 970-266-8146. And I'm at extension 81. Thank you so much for your time.